Hey traders, happy Monday. Welcome to Charts and Coffee for October 11. Great to see everybody. All right, so let's get to it. We've got an interesting week coming up, one where we could see a little bit of weakness to the downside in some of the major averages, one where, we might get a little bit more insight into whether or not this market wants to persist and chop, which is, by the way, the market trend, that those choppy market strategies that you've been waiting to deploy. What do you do when the market's no longer in a trending environment? This is the time to start thinking about that. And then if you have downtrending strategies that you have been wanting to just warm up, look, keep them on the sidelines for now. In most of the broader averages, actually in all of the broader averages and most of the sectors, there are very tiny, tiny places in this market where, yeah, a downtrend is intact. We'll talk about both those things, how I trade chop, how to recognize a downtrend when we get together this Wednesday at 8 p.m. So keep an eye on your inbox for that email invite. All right. So as always, great to see everybody. Okay. So let's do this. I do want to jump on over to the economic calendar for a look at the week as we are beginning a new week. We do have a pretty quiet day. I mean, by all rights, today should be considered sort of a bank holiday day. I mean, we really shouldn't be looking at today's action as a full steam ahead. I'm not saying phone it in. I'm not saying we may not get some decent movement, but please know we've got a bank holiday in North America. So you'll notice there's no data. I think the bond markets are closed. There are a number of markets that are closed. So it's kind of a mixed bag where you do have trading going on in equities, but not a whole lot else in terms of Columbus Day. So kind of a day where you don't want to be thinking this is the beginning of the week. That will really be more so tomorrow. And tomorrow, holy cow, this is now the third week in a row that we're going to have consistent FOMC member speeches, messaging, events, etc. We've got Evans today. We've got Clarida and Bostic tomorrow. And we kind of scroll through the remainder of the week. Here comes CPI. Now, I've talked about those specific days where we have a little bit more volatility before the 9:30 bell rings. CPI on Wednesday would normally be one of them, but not so fast. We have FOMC meeting minutes at 2 p.m. So it's not the same impact as, say, an FOMC event where we have the presser and the rate statement and so forth, but we get a little peek behind the curtain, so to speak, at the way they came to their conclusion in terms of the statement and the messaging. So that's always an interesting one. Wednesday is going to be a pretty rock'em sock'em volatility day. We go into PPI, shocker, more Fed speak. And then we have core retail sales. So this is and then Williams lunchtime on Friday. So when you take a look at this calendar, today is about the only day that we're going to be without any major economic events that are going to give that volatility. Although remember that bank holiday today, does bring its own illiquidity, and in that illiquid environment, things can act a little bit more dramatically. Okay, so keep that in mind. That's what we've got so far to kick off this week. It's a week full of a lot of data, events, data, FOMC chuckleheads, you name it. We've got all of it. So let's dive into the questions. As always, our best part of Charts and Coffee, get into those questions, seeing where y'all are looking for opportunity. And let's dive into the first question, and that is Andy. Hey there, Andy. Shorts on XLP. So yeah, I mentioned there's a few corners of the market that are ripe for potential shorts, and XLP is certainly one of them. So this is what I see going on in XLP. Red grab candles, red JT multi. This is the structure of a downtrend. This is a more defensive corner of the market. So interestingly enough, if we are looking at something like XLP, and Andy, I love that the first question this morning was an ETF, because, I think a lot of folks might think, okay, Ron, yeah, we know you got a class coming up on Saturday on ETFs. Are you just trading ETFs? No, ETFs are, of course, a very liquid and inexpensive way to engage a big number of stocks with high concentration weighting. So you're able to trade certain names. For an example, in XLP, we know we've got exposure to Walmart, Coke. Exactly. I love how you phrase it, Andy, because this is where a lot of folks wonder, okay, Rod, we got it. You trade ETFs a lot. But what do they tell you about individual stocks? In this environment, and since 2008, everything. Do you have a high concentrated weighted stock? Are you trading apart from the passive investing universe? And what do these sectors tell you about the indices? The ETFs kind of work up to the indices to understand what's going on within them, and they work down because the most influential corners of the market on stocks or how they're moving with the index, and even more specifically, how they're moving with the ETF. Now, when it comes to XLP, Andy, I would say that weakness in XLP and XLU, look at them together. I would probably say I would favor XLU by just a little bit, just a little bit. But XLP would be probably my second favorite, maybe tied with XLI. XLP is probably a little bit better than XLI. So there are certain corners of this market that we could look at the short side, which again, it's the first time in many years in a class where I can dive into here's how I trade shop, and here's the tools that I use to do it, and here are the setups and patterns, and here's how we trade downtrends. And while they are very similar to uptrends, they do have some characteristics unique to themselves. So I had on Friday, I said, hey, there's a short term duration, meaning I'm not looking to be in it for very long, but there's a resistance level on the cues. So if you want a little insight into that, check out Friday's video and then come join me on Wednesday and I'll start showing you a lot more of the building blocks to that process. So yeah, I like it, Andy. I like it. And I think it actually is, if we're looking at defensives, it's so hard for me to be longer term bearish in the S&P and the Nas. So I hope that helps. All right. Next question, Antonio. Antonio, can I share what I would use for price movement range to decide how wide to set the trailing stop in a winner? So if you've got a winner, right, long or short, in terms of setting a trailing stop, and by the way, it's no different. And I love that you're using historical movement, right? Historical volatility. So the difference with intraday is you've got to know clearing range lows. There's your validity there. As far as price movement range on how wide to set the stops on a winner, look at recent lows, look at Darvis, right? And then I would look at, depending on how much you're willing to risk, once you factored in recent lows, then focus on that 240 to daily price movement range, the EPMR, the expected price movement range. So that's what I would recommend on that in terms of, all right, if you're looking to put a safety net, how far will you let the market fall before it catches the net? Everyone's got a different comfort level, but there's always that concern that you're going to smother a winner. And I love the question, because the idea is if you're going to trend follow, which may not necessarily be what we're dealing with to the upside. If you're going to trend follow to the upside, you actually have the latitude to keep those a little tighter. If you're trend following to the downside, be very cautious, because downside volatility is very different than upside. So thank you for the question. Christian asks, can I summarize my trading as this? Ooh, I'm interested. All right. If we are in a trend environment, look to buy or sell into the wave. In the most basic way, eliminating patterns, volume, and other things like that. Yeah. I mean, in the most basic way, yes. I wouldn't limit it to just a wave, but that's going to be one of the best places to look. And if we're in chop, look to buy overbought and oversold. Christian, that's a pretty darn good idea. Now, as far as the basic foundation, you've got it, right? As far as the tools to recognize overbought, oversold, or the tools to recognize that we're in a trend, that's where, the indicators, the process, the colors, the read on the market comes in. But yeah, that's, if you were to synthesize, right, the bouillabaisse of what I do, yeah, it's pretty accurate. Now, making it happen and identifying those environments, that's where the trade craft, if you will, comes in, right? And it's really that trade craft that is assisted by the indicators. So we're more um, objective about it. We have more confidence about what we're seeing. But yeah, good stuff. Absolutely. Um, Kay asks, for chop, I've suggested ready aim fire and or slow stochastic. I use a V-score as well. How slow is slow? Kay, I would say that what I've usually recommended, again, if you got the environment right. So I would usually look at a 21K 3D. I mean, that's how slow I'll make it. Yeah, absolutely. That's how slow it'll be. All right. Esteban asks, can I check Natty? Gladly. For natural gas, I want to get into natural gas. I have a lot of folks that mastery said, Rog, let's get into natural gas. This has been such a great winner for us. And, the temptation, this is recency bias, right? What are the biases that plague us as traders? We want to get in because we know how we've benefited from the previous pullbacks. Yeah, I do want to look at UNG again, and that will probably be today. Now, the size of the sell-off, I think the size of the sell-off today would probably merit our waiting for tomorrow for a minor lower inside day, but this could be easily a level from which we could look to enter. I mean, I think 535 is a level that I've been talking about for a while as a way to get into UNG. So yeah, definitely keep an eye on that one, Esteban. And if you're in the mastery, heck, if you're in the futures room too, we'll probably set that up this morning, likely during the clearing, unless during the clearing range we get any day trade. So again, day trade in the morning till about 11:30, and then look for longer term setups the second half of the day. So a lot of folks have asked me, Rog, I took your day trading class earlier this year, August. How does this work? With that, so now you're getting my full day, right? This is actually, funny enough, it's the complement to that class because I don't day trade all day. What the heck do I do? What the heck else do I do with my day? Once I'm done with that short-term time frame, shorter duration view of the market, looking to take advantage of opportunities there, then I want to look at the longer term duration. Then I want to start looking at the trends or the chop that we can take advantage of. And so that's where the second half of my day is sort of this second class. And then I think what's really cool is you don't have to abandon what you know about day trading to take advantage of this class, because I've always said, and I believe this because I've experienced it in my own trading, when you day trade, your ability to understand order flow, your ability to send orders into the market are so much sharper. Those skills are so much more acute, and you can carry that. You've got a set of skills. You can carry that into your longer term trading, which I love, to be able to sort of keep my eye on longer term time frames while I'm day trading. I mean, there's a reason that my day trading class layout looks like this. The daily's right there on the right side. The daily is never far from our minds because the daily is probably one of the more important aspects of what we do for day trading. If I'm using the daily that much, why not also see if there's opportunity there? So that's where, for me, it becomes a perfect complement. And that's where short-term duration trading is very, very powerful when you couple it with longer term, because you're never then forcing one style of trading to do all the heavy lifting, to put capital in your account. You can manage both. So pretty stoked about that. And Natty Gas, Esteban, is one of those longer term. So what do I mean by longer term? Daily time frames. Let's not get complicated about it, right? Let's be very simple about, I'm day trading on, say, a 5-minute time frame, and I'm going to follow the longer term trend, like natty gas, like UNG, which is at this point, Esteban, yeah, we're 8x. No, I'm sorry. Out there's Lorna, we might be 9x on this. Why? Because we followed the trend on the daily time frame, right? I didn't try to confuse what I do on the 5 minute versus what we do on the daily. And what does daily mean? One new candle per day. And this is where, let's say, you day trade in the morning and then you want to look at natural gas in the afternoon. You don't have to babysit natural gas. I'm not staring at natural gas the way I would have to be as in tune with what's going on intraday. I set some levels. I know what I want to buy. And then, we're free to be a little bit more hands off on the daily. So I like the fact that I can juxtapose a very time and focus intensive style of trading with another style of trading that's as close to, we don't want to say set it and forget it, right? But it's really more like set it and carry on, right? With whatever else you have going on in your life. For me, sometimes it's a sushi lunch with my husband. All right. So what's my opinion of Canadian dollar, oil, energy? Oh, great question. The lazy lizard. Lazy is not a bad thing. It's not a bad thing at all. All right. So what's my opinion of Canadian dollar? Let's start off there. A couple ways we can trade Canadian dollar. I think one way that might appeal to a broader group of folks is the FXC ETF. Nearly everything, there's an ETF for that. Then, of course, we can dial it into the 6C. This is where we're talking a little bit more specifically futures, which is great. Love futures. Look how they look identical almost. Yeah. And then we have US dollar versus Canadian dollar, right? Which is actually the broadest, the widest view of currencies. I would have to say Canadian dollar right now is not on my radar because when I look at the primary driver for my currency trading, a lot of which can be done via futures or ETFs, one of the great downtrends of this market. A lot of folks are looking for downtrends in relatively choppy or strong markets. Why not look for things that have already printed a sea of red grab candles and JT multi indicating the weakness here? So if I have, again, this is a daily time frame, right? This is what I mean about longer duration. This is what I mean about taking advantage of multi-month downtrends or multi-week, multi-day. This is the FXE. So I would tell you, specific to your question there, my friend, I would say no to the Canadian dollar, probably a little bit more interested in what corners of the market, and I'm going through some of these currency ETFs, are weak, meaning euro versus dollar, pound versus dollar, Australian dollar versus US dollar. What are the ones that are weakest in relation to the Canadian dollar? So another aspect of this is I don't know that I want to be short the currency of the country that is probably disproportionately going to benefit from strength in energy, lumber and energy when it comes to the loonie. So, which is the Canadian dollar. So crude, love it. XOP, love it. So notice I'll go from the commodity, which we can trade via CL or the USO ETF. And again, remember, there's almost just like there's an app for that, there's almost always an ETF for that. So I could go USO, and then I'll actually go XOP. Yeah, I'll go XOP because this ties back into Esteban's question about natty gas. XOP is going to benefit from the strength in crude and the strength in natty, right? So love that. All right. CCJ. Yes, we've been wanting to get back into uranium. We've talked about CCJ. These are some of the markets that we're interested in the mastery. One is a stock that tracks with the ETF of uranium. I can't trade uranium as a futures trader, but I can trade uranium as an ETF trader. So the question is, the first target is hit. Can we still get in? We have to so Desert Dog, so that just like I want to look at setups in UNG, we're going to re-examine URA and CCJ. And what I'd rather do is set up a new trade. So I think these two markets are going to be a big part of what I'll be doing for the next month easily. So inevitably, this will come up in the class and in the live trading too. But yeah, if you're thinking about what we want to do with this one again, yeah, CCJ and URA definitely on the radar. Maybe URA a little bit more, but I would not re-enter on the old. I would not refire, although you probably could refire the older setup. In other words, you have the levels, you could do that. I'll probably set up another one. Yeah, I'll set up another one. Okay. Speaking of setups, you should be getting the email if you didn't already over the weekend. We have the second webinar. So the first webinar, we talked about trends. We talked about the tools. We talked about bringing in that daily time frame and ETF mindset. The second webinar, which is nothing like the first, I don't do the same webinar twice like that. We're going to talk about downtrends and chop and what we're dealing with in the current environment. So while you built the foundation in webinar number one, webinar number two is going to build off that and then finally lead to the class this Saturday. So if you want to check out the first webinar, simplertrading.com/trend. And then if you want to check out what you get with the class, simplertrading.com/extract. So yeah, definitely good question. Really great question. And I love how you combined all those different markets because that's how we want to look at our journey through the market, that interconnectivity. So good stuff. All right, gang. I'll see you tomorrow, same time, same station. Be good to each other.